Good morning, everyone. Got a little sore throat today, but no big deal. It is very early in the morning, 4:30 in the morning, California. This is the July 19th, Friday. Happy Friday. This is the plan your trade video for today. So now we've gone through, I'm opening this up with a 30-minute SPY chart so we can see, this is roughly 2 weeks ago, the predictions that have been made with regards to my SPY cycle patterns, the peaking that came up here, the rotation down that occurred here on the exhaustion breakdown, the basically the major crush pattern that occurred here. And then today, if we take a look at the cycle patterns, we're in a bearish exhaustion pattern in a trending mode. You can see that the daily bias and weekly bias are still bearish. I just checked those last night. They haven't changed. We are in a long-term trend bullish, short-term trend bearish or warning, still an explosive price trending. And so we are now at 552. Members have been commenting and others have been commenting how grateful they are of this research. I really appreciate that, guys. And I'm trying my best to keep you guys, ahead of these market moves. Yesterday was a big move, but in yesterday afternoon's or evening's video, I commented how I'm looking at these patterns. Remember, I teach you to read these in like paragraphs or sentences. So I read this as an exhaustion rally, an exhaustion carryover, a possible breakdown, a major crush, which I thought was going to be to the upside. And here we have bearish exhaustion. Bearish exhaustion to me is a pause or a mild rally to the upside. Potentially, given the volatility and the explosiveness of price, maybe a pretty good sized rally. And that's today. So now we move into next week. We get a topping pattern, which again, topping pattern means price moves up, tries to find a peak, and then rolls downward. A flat down bar pretty much means it doesn't do anything. It just goes sideways. A Harami inside bar, depending on these previous two bars, this can actually have some range, but it stays within the body of this flat down bar. Flat down means, again, really doesn't go anywhere, but generally drifts downward. And then a temporary bottom is kind of like the opposite of a top. Now, the temporary bottom is in trending mode. This means that price will come down, find support, and then roll back upward. And then we have a top resistance in counter trend mode. And I read that as an opposite type of pattern, meaning that this is going to be a bottom support trying to reaffirm this previous bottom and then moving into a upward trend. So we might get two bottoming triggers here on the 25th and 26th. Remember, that's a full week away. You have a preparation to know 5 days from now, we could get a couple of good bottoms. Then we get the consolidation and crush over the weekend, which means that we could see a pretty flat day on Saturday and a major event maybe on Sunday, the 28th, psychologically. Then we open the week on the 29th with a flat down, then a pop, which is similar to a crush. A crush is normally a downward pattern. Pop is normally an upward pattern. So we're in carryover pop, counter trend, bottom rally start, which means we'll probably see this thing move up and come back down into resistance, then a trending base rally, then a carryover in breakaway. Then we get into carryover, a bottom pattern, an up, down, up, top resistance, and flat down. So remember this, to me, this looks like a rally phase starting to set up right here. Okay. Bottom rally start in counter trend mode. Looks like we could be setting up some sort of a last resistance area. Then we get a base rally. Then we get a breakaway. And then we get an up, down, up, top resistance, which means market's moving higher, runs into resistance and rolls down, and then a flat down. I think this is where we start to see really in this area here, the 25th, 26th, 29th, 30th, and 31st. I think we're going to start to see some sort of an upward rally here. So we come back over here. We take a look at the chart. I'm trying to leave some of my original drawings, but I'm going to have to clean a few here. I took 20 minutes to clean this up today, trying to get you guys prepared for what's coming. Okay, that looks pretty good. So, where we're at with this phase of the market, and I know a lot of people have their opinions. That's fine. I'm not going to try to change mine. I'm going to just stick to what I've been doing, and everybody else can, try to essentially blend their ideas with mine. So, I see today's move as kind of an exhaustion of this bearish trending. And I did this yesterday in the chart, and I will try to find it. But generally, we have this resistance channel, this same support area. I'm trying to get it. There it is. This same support area. Excuse me. That's a little better. The same support area that we had from Tuesday and Wednesday is likely to come back into play. So this 557 to 558, 559 area is very likely to come into play today. I believe this bearish exhaustion pattern, this is gonna resolve, as I showed you yesterday, to the upside. Let me spread this around a little bit. I believe it is going to resolve to the upside. And I believe we're going to be looking at, like I've shown here, a pretty solid move upward here, possibly opening around. Well, look, this is exactly where I drew it. 553, 554.90. So around maybe opening around 555 or just below into this area, back into this resistance area, and struggling higher up into the 559 to 560 area. I believe that is highly likely today. It's not going to be, rallying up to 564. I don't believe. Now it may rally up into 562 to 563 area on Monday. We could get a bit of a carryover over here before rolling into consolidation and then flattening back out around the 24th and the 25th, building our apex base for a breakaway pattern. And remember, that's really what we're looking at right here when you get into this area. This is the primary apex area that I expected price to roll out of. And that there is a secondary apex area back here, which may end up being our longer term apex a little higher. So understand that as we continue to move forward, I'm playing exactly what the patterns say, and I'm looking for an exhaustion rally today, a bearish exhaustion rally today, putting us right back up into and possibly above this channel section here. Okay, this area here, I believe we're going to rally back above that up into the 557, 558, maybe 560 area. Maybe tomorrow, or sorry, Monday, getting up in the 562 to 563 area, then rolling back downward, retesting these lows around 557 and three quarter, 557 and a half, staying above all of this critical support, and then rolling into the 24th and 25th into an upward rally. So today we're getting a bit of an exhaustion move. You can see how I kind of drew this. I'm going to get rid of this because this is irrelevant right now. If I can. All right. Can't seem to point to anything. Got it. Okay. So where we're at with this is we are moving into this consolidation phase. Get rid of this. And I believe we're going to see this move. And then I believe we're going to see this move. And then the following day, we're going to likely see this. So this is kind of what I'm expecting for Friday and into Monday. And then we get Tuesday, Wednesday. And I've got to make sure of this. Monday, Tuesday, Wednesday, Thursday. Looks like I was missing one. So we come in here. Oops. Come in here and get to Friday. We've got our top resistance in a counter trend mode, which will be a bottom. And that will likely be more so in this area here. So there we go on our Friday. And again, I think we're going to be just consolidating into this channel, building. You can see, I mean, I can almost draw this right now. We've got enough data here. Let me go to 1 hour. Yep. So here we have our trending. We're probably going to come back up into this area, which will set up, like I said, this type of a flag. And you can see where we've got this peak coming down to here. So we've established a new low. And this would essentially be the type of flag that we're looking for. Okay, this flag doesn't exist anymore because we've got this new lower flag again. And this flag doesn't exist because it never reached up here. We reached up into this area. So we would be looking for some sort of a flag like this, potentially. And this potential flag carrying all the way up never existed. We will see how this plays out. But this would end up being more along the lines of this, potentially. And let me come down here. And moving this out to about here. Where did that pattern go? That line. Did it just disappear? Did I lose it? Oh, there it is. All right, get back in here. Yeah, it's back here. There it is. Okay. Maybe about like that. And again, got a lot of stuff on my chart, I know. Okay, so we're going to see how this week plays out. Today is the bearish exhaustion pattern. I'm expecting a moderate rally. We're up a little bit already. Remember, this 554 to 556 area is going to be very critical for us to get above. Okay, so right now that's going to be very strong resistance. We might struggle in this area before we get out of this area. Once we get up above 556, say 80 or 90, I think we're going to be pretty clearly reverting back to the upside. Now, eventually, we may try to fill this gap. Eventually, we may get all the way up into this 564 area and try to fill this gap, but I'm not counting on that right now. The gap fill could come much later over in this area when we rally higher. So even getting up into the 561, 562, 563 area, that's fine. We don't have to fill this gap right away. We can fill it right over here on a big explosive move to the upside when we really start to rally. Okay? So again, let's pay attention to what's going on. It looks like, based on price patterns, we have a potential apexing out here around the 24th, which is good. And then we have another potential apexing out here around the August 5th, which aligns very well with this breakaway carryover rally phase. So we'll see how that plays out with the cycle patterns. And I know, like I said, everybody's got their own analysis. People are coming at me, telling me their Elliott wave counts and others. I really appreciate it, guys. And I want you to continue to learn from my examples and learn to use your own skills to aggressively trade the markets however you like. But one of the most important things you need to understand is patience. So right now, sometimes being patient, waiting out these trends. Remember, as I told you, the market either trends or flags. Right now, you can see we're in a bit of a pullback. We're going to move into flagging, I believe, for the next 3 or 4 days, maybe a bit longer. And then we should move out of this cycle, maybe into a new flag. So, I mean, there's nothing saying we couldn't move out of this cycle, reach a high, and then begin to flag out something like this, maybe off of these lows into another sideways flag that gets us into a bigger breakout somewhere else. So be aware for a chop. Flagging is very common when we're not trending. Okay, guys, that's it for now. Talk to you later.